Good afternoon. This is Brian Dewhurst with Uncommon Wealth Partners, bringing you your market update for July and Bitcoin briefing. The market is hot and it's heating up in summertime. S&P 500 up 19.97, NASDAQ up 24.10, Dow Jones up 16.8, gold up 10.01, and Bitcoin up a staggering 213%. We continue to say you cannot ignore Bitcoin. We'll get into that more, but first to the S&P 500. I've got the weekly chart zoomed in, and I've been talking about this horizontal trading range we've been in, and I think we just exited it. You'll see the horizontal trading in the red box, and you'll see that the price has just exited it on the upside. If you look back to prior videos, kind of when we first got started with all this, we showed you kind of these horizontal trading ranges over the last 70 years, and that the longer a market trades sideways, the bigger the move up or down, and typically up. So you see that characterized here. We got 6 green dots, which is incredibly bullish, and we've got kind of the light teal, light blue color, which is typically bullish. And so S&P looking very strong on the weekly chart. On here, zooming out to the monthly chart, you can see it as well, that trading range now, and then the price moving upwards. Not only that, on the monthly chart, we have a squeeze down here, which means there's pressure building up and it's declared up. So this shows us, 6 green dots as well. This shows us that this could be a multi-month, even multi-year potential uptrend. Again, it looks like the Federal Reserve is buying the stock market to me. Money just remains incredibly cheap. A lot of the global economic indicators are in the tank, but the market continues to power higher, and so we're seeing that disconnect between economic numbers and the stock market. So this is the paradox we're headed into, with potential, I would say, manipulation from the federal government, but good for everybody's retirement accounts and things like that. So looking at this, I brought in the S&P into a daily chart. This really zooms in this trading range, coming down, coming back up, coming down, coming back up, and now breaking out of that trading range to the upside. So again, the S&P 500 on the daily, weekly, and monthly charts looking very, very strong. So we should be open to the idea of higher prices moving forward as the stock markets are setting new all-time highs. With that, we have gold. Been talking about gold for a while. Introduced that into the videos, I think, last year. And this is the daily chart. So you can see, wanted to show you just kind of this bowl we're coming out of here, just kind of slightly coming up and then trading sideways, and then just really kind of more of an explosive move, about 10% move, really in the last several weeks. And gold is going to continue to play more important part, one of the largest, longest owned assets in the world, over 10,000 years documented history as wealth and money. I feel like gold is money, and really what gold does is preserve your purchasing power. And so with not only the US, but Europe, China, South America, Britain, everybody's printing money like crazy. I mean, the Federal Reserve's even talking about lowering interest rates into a stock market high, which seems crazy to me. So gold, I think, should continue to do well. We got some more on gold here in a little bit. I'm going to keep going. And then gold, I got zoomed out here on the weekly chart. Again, you kind of see this multi-year basing head and shoulders pattern. This would be the left shoulder. This would be the head. This would be the right shoulder. And we should see gold go on to multi-year new highs, I think, over 2021. So down here on the chart, you see the squeeze down here, and it's declared up. And so that should lend to gold being an up channel. We should be open to higher prices in gold. And when you look at the first screen, noticing the returns on just the markets, gold, Bitcoin, basically, it does not pay to sit in dollars and sit in cash. And so most risk on assets are being rewarded with higher prices. But it's a function of the devaluing of the dollar because they just keep printing more and more of it. So something we're going to continue to keep talking about. Here I got 2 just quick things off Twitter on gold that I thought were super interesting, trying to share more of the stuff that I'm looking at, some of the stuff that I come across. But this guy says here, gold right at the all-time highs versus a basket of 27 currencies, excluding the USD. Gold does a great job of protecting purchasing power on a globalized basis, which is how it should be viewed, as a pure expression of money in the store of wealth. And so couldn't agree more. Gold is a store of wealth, protecting your purchasing power, and it is the purest form or definition of money in the world. And everything else is just debt or credit or currency. Those three words are synonymous with each other. Currency is credit, and credit is debt. And so that's what our system, the USD, is based off of. So gold is that equalizer. It's the other side of the scale in terms of weights and measures. And that's what gold is. Then this guy, Peter Brandt, phenomenal trader. Gold established his target of 2637. Right now it's about 1410. So that's almost double from where it is here. So he's also expecting all-time highs set in the price of gold. Again, gold doesn't really change. An ounce of gold is an ounce of gold, but what it's priced in can change, and that's dollars. And so, again, he's got a multi-year chart here going back to the 70s on gold, showing, just multi-decade trading. And you see this basing, this shoulder, head, shoulder pattern that I kind of referenced on the previous chart, setting a massive foundation to go on and to set new highs. So thought that was interesting. And then Bitcoin, obviously from the first slide up 213% year to date. This dotted line here was the beginning of the year. And so you kind of see, it's just kind of gone very, very nicely up. This is a weekly chart. So zoomed out, you see the cross here of the shorter term moving average coming up on top of the longer term moving average, coming out of that long downward trend that it was on for over a year. And so putting in a nice foundation for Bitcoin to move higher. I've also got Bitcoin on the daily chart. You kind of see here as that short-term moving average really gets on top as well. We come out of this bull, and you kind of just see these. I want you to see these as like steps. You just stepped up Bitcoin, stepped up sideways, stepped up, and now we're trading sideways. It'll be interesting to see if it has enough momentum to move up towards breaking through that 13,915 towards 15,000, and then ultimately 20,000 maybe by Christmas, trying to see if it will attack the all-time highs. So again, Bitcoin looks very strong. And then I got some more stuff on Bitcoin. I just thought this was interesting. Trump just came out. Actually, that was like today, I believe, that takes aim at Bitcoin, says he's not a fan of Bitcoin or cryptocurrency. And the crypto community basically said thanks. So it'll be interesting to see kind of the longer term there. But from things that I've been reading and different things on the internet, that the IRS is ramping up focus on cryptocurrency, wanting their taxes. Obviously, the regulators, SEC, all of that are starting to want to regulate crypto more. And so you're going to see a lot more government regulation, taxation, and that should be interesting to see how that plays out in the price of Bitcoin. But remember that Bitcoin is a global asset. Maybe one of the biggest global assets, and since most, anyone in the world with a cell phone and any amount of money and currency in their native country can exchange in and out of Bitcoin anytime, 24/7. So it's one of the most interesting assets out there from that regard. Very similar to gold, in my opinion, where global type, obviously money, people can exchange in and out of it, but again, not being electronic for gold has had its issues as well, just to the common people, but typically owned by institutions and governments. But again, it's going to be interesting to watch. And then this is a chart from that same guy, Peter Brandt, but he shows you the four parabolic moves that Bitcoin has made since its inception. And he believes that the fourth parabolic move has started and is just getting started. And so it should be interesting to watch. For sure. And, JP Morgan has been very anti-cryptocurrency and Bitcoin in the past with their CEO, Jamie Dimon. And this just came out that they're a ship that they own, like a tanker ship, that ships stuff overseas, port to port, basically was seized with 1.3 billion in cocaine aboard, a JP Morgan owned ship. And so again, it's not only listen to what they're saying, but watch what's actually happening and what they're doing. And so obviously think the banks and especially the big banks, Wall Street banks, are involved in a lot of nefarious stuff. And this just further proves it. You see them paying fines for, trade manipulation, fraud, all that type of stuff all the time. And so this context that only cryptocurrency is used for nefarious things or criminal activity is just blatant lie. And one of our largest financial institutions, not only in our country but in the world, and one of the 23 primary dealers that basically gets to sell treasuries into the open market, which is how the Fed prints money and pulls it into the economy. Basically found with 1.3 billion in dope on their ship, and so they're just as involved in nefarious things. And not to say that cryptocurrency can't be, but it's not an isolated characterization of just cryptocurrency. So wanted to make that distinction as well. So that's all we have for you. Again, economic data continuing to distance itself from the stock market as the stock market just continues to set higher highs. But so does Bitcoin, as Bitcoin's on fire, and gold is showing strength. And so really the lesson, I think, is staying in cash is not getting rewarded from a return standpoint, like being invested in some of these other asset classes. But with prices at a decade long highs, obviously got to be careful here about deploying new capital. So if you want to talk about how this stuff impacts your plan, we'd love to talk to you. You can schedule a 15-minute call on our website, uncommonwealth.com. And again, hope you enjoyed this and look forward to talking to you next month. Thanks, everybody. Bye-bye. The material in this video has no regard to the specific investment objectives, financial situations, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or an offer to buy or sell a security or any other related financial instruments. Nor should any of the content be taken as investment advice. Any of the opinions expressed in this video are subject to change without notice, and Uncommon Wealth Partners LLC is not under any obligation to update or keep current the information contained herein. Uncommon Wealth Partners LLC and its respected officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. Uncommon Wealth Partners does not accept any liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.